What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals going over S&P 500 and the Nasdaq 100, but also breaking down from a technical standpoint for oversold stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had an absolute bloodbath in the markets, guys. Oh boy. Russell 2000 went down 2.44%, Nasdaq went down 2.19%, Dow Jones down 1.78%, and the S&P 500 went down 1.70%. And mind you, guys, the markets were looking way, but I mean way uglier than the final close that you guys are seeing over here 40 minutes before the trading session closed. We had some sort of relief rally into the closing bell, and despite the fact that these numbers look awful, look ugly actually, but these numbers were looking way uglier, guys, 40 minutes before the closing bell rang. And what was the reason that the markets, let's say, had today in order to go down the way they did? Well, we got news overnight, guys, from the Chinese government press that the Chinese government is not going to bail out Evergrande, this company that you guys can see over here. So I want to read for you something that a person that supposedly knows a lot about China said this morning. So Evergrande Group is pretty much a real estate group, a very big real estate group in China. I think that this is the second largest real estate group in China. And we are talking, obviously, guys, about the second largest economy of the world. So let me read here for you guys. Facing default on billions. Rating agencies say Evergrande Group appears unlikely to be able to repay all of the 572 billion yuan or $89 billion it owes banks and other bondholders, as reported by the Associated Press, which also noted Beijing is likely to step in to prevent systemic damage. So I am quoting here, I suspect the Chinese government is on top of this, and I don't doubt they will deal with it severely, but I don't think it will have the global effects the market is suggesting this morning, said Carlyle Group co-founder David Rubenstein during an appearance Monday on Mornings with Maria. So here's the problem, guys. So the Chinese government press said, supposedly overnight, I haven't read it, that the Chinese government isn't going to bail out Evergrande or Evergrande Group. I think is the name of the Evergrande Group, correct? However, guys, I don't think that the Chinese government is going to simply look the other way if such a big company happens to default in China. So maybe the Chinese government can nationalize Evergrande Group, and by doing so, they are going to be fixing the problem. So maybe they are not thinking about bailing them out, just like we did here in the US back in 2008, but maybe they can nationalize this company. So this is a subject that we need to keep a close watch on. But I am not saying this, guys. What I just read was said by this guy, David Rubenstein. This morning, he says that the markets are overreacting. So I believe, guys, that the markets were simply looking for an excuse to sell off, okay? Because we are talking about, we have, as of now, a season, or we are going through a season in the markets that is typically negative. So until mid-October, we are going to have a lot of selling pressure out there. And the perfect excuse today was this situation of Evergrande Group. So if we take a look at the 11 sectors that trade inside the S&P 500, all of them obviously closed today's trading session in negative territory, and the worst performing sector was the energy sector, which went down 4.20%. And mind you guys, at some point today, the financial sector, which was the second worst performing sector today, was down almost 4%. Jeez, unbelievable. And remember, guys, the most important sectors inside the S&P 500 are the financial sector and the tech sector. So the financial sector was at some point today near 3 p.m. or something like that, Eastern Standard Time, it was down almost 4%, and it managed to close today's trading session down 2.71%, which was a decent drop as well. And another very important sector was the tech sector, which closed today down 2.03%, but at some point today, the tech sector was down more than 3%. So now let's go ahead and by the way, guys, this is something that is worth pointing out, and this is something that I have told you plenty of times here on the channel. Whenever you see that the markets, or whenever you see that the best performing sector is the utilities sector, that implies that the market have a defensive attitude during that trading session. So today the best trading session was utilities, so that implies that the big money of Wall Street was purchasing utilities stocks, which are considered defensive stocks, okay? Because those stocks are, for the most part, very predictable when it comes to their revenue and to their the profit that the utilities stocks make. So now let's go ahead and take a look at the S&P 500, and let me pull up here real quick, guys, the 1 day 1 minute, and take a look at the massive drop that we saw today. The bulls were rejected on 1, 2, 3, 4, 5, 6, 7, and 8 occasions, and the bulls of the S&P managed to find support. Now, this is the Nasdaq 100, guys. Sorry about that. Let me go over the S&P 500. I was looking at the wrong stuff. My bad. So the S&P went down today, as I said in the introduction of this video, 1.70%, and it closed today's trading session at 4,357 points. But the 1 day 1 minute chart of the S&P looks pretty alike relative to the 1 day 1 minute chart of the Nasdaq 100. So the bulls were rejected on 1, 2, 3, 4, 5, 6, 7, 8, and 9 occasions. And take a look at this spot, guys, in which the bulls of the S&P managed to find support today. 4,305 points, very close to a critical area of lower support at 4,300. And after the bulls hit 4,305 points, or 4,305, we saw a nice recovery up to 4,360, which is going to act as resistance tomorrow if we happen to open the trading session below this area, or as support if we happen to open tomorrow's trading session above 4,360. So take a look. Let me pull up here the 4-hour chart and take a look at the spot in which the bulls managed to find support today. As I just said, guys, 4,300. 4,300 is a previous area of support that already acted as such for the S&P 500 back in the beginning of July, and it also acted as overhead resistance back on June 29. So the bulls found support at a spot in which they were supposed to find support at. We can make the case, and since we saw a 50-point rally into the closing bell, that most of the algorithms out there triggered as soon as the S&P 500 got near or got close 4,300, but that is going to be obviously, guys, a very important area of lower support in tomorrow's trading session. So keep in mind, guys, that we saw almost a 50 or a 55-point rally into the closing bell, but despite the fact that we saw that rally, the S&P is still in oversold territory. So as of now, and from a technical standpoint, no doubt about it, the bears are in charge of the S&P 500. However, and I have told you this on plenty occasions here on the channel, guys. Nothing goes down in a straight line and nothing goes up either in a straight line. So if we are going to see an 8% correction or a 10% correction in the S&P 500, we are going to see swings up and down on our way down. So I think that the likelihood of seeing a relief rally tomorrow is very high because we are still in oversold territory. The relative strength index of the S&P is at 27 points. So if tomorrow we open the trading session below 43.60, obviously that is going to be the most important area of overhead resistance. Keep in mind that 43.60 is a previous area of overhead resistance that acted as such on 2 occasions back in the beginning of July. So we are talking about a former area of resistance that was broken to the downside and that should act as resistance once again. If the bulls manage to open tomorrow's trading session above 43.60, then the most immediate area of overhead resistance for the bulls is going to be 4,400. That is going to be a very tough spot for the bulls, guys. 4,400 is a previous area of support that already acted as such for the S&P 500 back on July 30th. But we are also talking about a former area of overhead resistance in which the bulls of the S&P failed on 2 occasions in mid-July. And on top of that, 4,400 is a previous area of support and resistance that coincides with the 180 SMA on the 4-hour chart. So everything is looking very bearish. I think that this might be today, the price action that we saw to the downside might definitely be the confirmation that we're going to see a decent drop in the S&P 500 of maybe 5 or 7%. However, I think that we should have a relief rally tomorrow. Maybe we can go up and maybe we can close tomorrow's trading session slightly below 4,400, and then we can keep on going lower. And in the case of the Nasdaq 100, this index went down today a lot, guys, and the situation was looking horrible. So the NDX went down 2.10% and it closed today's trading session at 15,012 points. And again, and as I just said in the case of the S&P 500, take a look at the relative strength index of the Nasdaq 100, guys. It is at 28 points. So despite the fact that we saw a nice rally into the closing bell, take a look, from 14,821 points up to 15,000 points, 15,012 points, this index is still due for a relief rally. So from peak to bottom, guys, the Nasdaq 100, I have here the wrong, I have the wrong stuff. Let me pull up my trend line. So from peak to bottom, guys, the Nasdaq 100 dropped today 3.40%. Jeez, what a bloodbath we saw today in the case of the NDX. So in technical terms, guys, the bears are in charge of the Nasdaq 100, no doubt about it. All right, there's no question about it. And if tomorrow we happen to see a relief rally, which I think is in the cards, then the most important area of overhead resistance for the bulls of the Nasdaq 100 is going to be at 15,150 points. 15,150 points acted as overhead resistance today. We are also talking about a former area of lower support that acted as such back on August 23rd, but we are also talking about a former area of overhead resistance in which the bulls of the NDX failed on 1, 2, 3, 4, 5, 6, and 7 occasions before. If tomorrow we happen to see another red day in the Nasdaq 100, then watch out for 14,800 points. I think that, and taking into account, guys, that the relative strength index of the NDX is very low, despite the fact, as I just said, that we saw a decent relief rally into the closing bell, but the relative strength index of the NDX is at 26 points. So if tomorrow we happen to see another drop, then I think that the lowest that the bears could go would be 14,800 points, unless we happen to have Very bad news overnight coming out from China, guys. 14,800 points already acted as support for the NDX back on August 19, but we are also talking about a former area of overhead resistance in which the bulls of the NDX felt back on July 20th, and they also felt back on July 6th. So what can I say, guys? The bears are in charge, but and as I just said, in the case of the S&P 500, I think that we are due for a relief rally over here as well. And now let's go ahead and take a look at AMC Entertainment. And in the case of AMC, guys, the stock of this company went down today 8.85%, and it closed today's trading session at $40.29. So I am going to zoom in here on the 4-hour chart. And guys, all of the stocks that I am going to break down in this video have something in common. All of them are extremely, but I mean extremely oversold, and AMC couldn't be an exception to the rule. So the relative strength index of AMC as of now is at 23 points. So the stock of this company is very, but very oversold. And guys, take a look at how today, towards the closing bell, the bulls couldn't hold this 180 SMA and the 4-hour chart as lower support. However, into the closing bell, they managed to reconquer this 180 SMA at around $39.88. And by doing so, they are keeping alive this golden cross that unfolded back on August 27. So that's hopeful. Let's just put it that way. So the main task for the bulls of AMC, or the apes of AMC, tomorrow is going to be reconquering $42. $42 is a previous area of support that already acted as such for the stock of this company back on September 3rd. But we are also talking about a former area of support that acted on 2 occasions back in the beginning of June. So I would like to see the bulls of AMC bursting above $42 and starting to consolidate slightly above $42, which would be a sign that the bulls are gathering momentum in order to try to take on the next 2 important areas of resistances for AMC. The first one at $46, which is a previous area of resistance that already acted as such for AMC this was back on August 30th, and we are also talking about a former area of lower support that acted as such on 2 occasions also back in the beginning of June. And after having been able to take on $46, then obviously they're going to have to deal with the impossible resistance at $48.50 or $49, which is an area of overhead resistance in which the bulls of AMC have failed on 1, 2, 3, 4, and 5 occasions in the most recent weeks. And they also failed, by the way, now that I am seeing over here, they failed at $48-ish also back in the beginning of July. So that is going to be the most important task for the bulls of AMC. And let's hope, guys, this 180 SMA on the 4-hour chart not to be violated, not to be broken to the downside, because by doing so, this golden cross is going to be invalidated, and the chart of AMC is going to change dramatically, guys. I think that would be very negative for the bulls. So the move to the downside that we don't want to see in the case of the stock of this company would be breaking this 180 SMA, as I just said, to the downside, and then after that breaking $38 once again to the downside. That is going to change definitely the uptrend that we are maybe arguably still seeing in the case of AMC. So we don't want to see AMC below $38. And the second stock of this video is going to be good old Apple, guys. And in the case of Apple, I actually bought a dip today. This was the only dip that I bought today. I think that I also picked up some shares of GameStop. So let me show you. I picked up 100 shares of Apple at $142.30. And as of now, I have an unrealized gain over here of $58.29. So what would be my plan when it comes to the position that I just showed you? Guys, if tomorrow we happen to see another red day, which I think is unlikely, but it could happen. I don't have the crystal ball, and we we cannot always secure an outcome when it comes to the stock market. So we could see another red day tomorrow. And by the way, take a look at the relative strength index of Apple. It is at 24 points, very but very low. So if tomorrow, guys, we happen to see another red day in the market, I am going to be interested in picking up more shares of Apple, maybe 50 more or 100 shares. It depends on what the overall market is looking like tomorrow. So I would like to pick up more shares at $139. $139 is a previous area of overhead resistance in which the bulls of Apple felt back on April 28th. So I think that would be a very interesting spot in order to pick up more shares of Apple. And mind you guys, and taking into account that the relative strength index of Apple is very low as of now, if tomorrow Apple happens to pay a visit down to $139, its RSI is going to be even lower, and that is going to increase the likelihood for the bulls of Apple to find support at a previous area of overhead resistance and then bounce back up. However, if we happen to have a relief rally, which I think is going to be the case tomorrow, I would like to sell out of the 100 shares that I purchased today at $145. $145 is a previous area of lower support that already acted as such for the stock of this company back on August 19. It also did it back on August 10, but we are also talking about a former area of overhead resistance in which the bulls of Apple felt back on July 7. So if I am able to close this trade the way that I am describing it, and since I purchased shares at $142 approximately, and if I sell out of my shares at $145.37, I could be making a 2.26% profit. I would be closing this trade, guys, at $145 because I have told you that from a seasonal standpoint, I think that we are still going to see more negative or more negative days until mid-October. So I don't think that Apple is going to simply reverse this downtrend that we are seeing on the 4-hour chart, and it is going to go back to $150 or $157. I think that if we see a relief rally tomorrow, that is going to be just a relief rally, guys. So I am going to play it safe. So I would be locking in my profit at $145, and then I would be re-entering Apple at lower prices if the opportunity shows itself. And the third stock of this video is going to be Nvidia, guys. And in the case of Nvidia, I didn't buy the dip today. However, guys, if tomorrow, and mind you, Nvidia went down today 3.59%, and it closed today's trading session at $211.13. Relative strength index at 29 points, so Nvidia is also very oversold. If tomorrow, guys, Nvidia and if the markets as a whole happen to have another red day, if Nvidia pays a visit down to $207, I am going to be very tempted, guys, in order to pick up at least 30 or 40 shares of Nvidia. $207 is a previous area of overhead resistance in which the bulls of Nvidia felt back on August 5th, but they also felt back on July 13. So if I am able to take a trade on Nvidia at $205-ish, then my price target is going to be the next important area of overhead resistance at $218. $218 is a previous area of support that already acted as such for Nvidia back on September 13, and it also did it back on August 24. So if I were able to take this trade the way that I am describing it, as I just said, picking up some shares at $206 and selling out of my shares at $219, I could be making a 6% profit. That's a very solid profit. And as I just said, in the case of Apple, if Nvidia pays a visit to $206, then the relative strength index is going to be even lower. And you guys already know that is going to increase the likelihood for the bulls of Nvidia to find support at a previous area of lower support and then bounce back up. I must be sounding like a broken record, guys. And the last stock of this video is going to be Facebook. And in the case of Facebook, guys, I am not so convinced about the dip that we saw today, even though the relative strength index of Facebook is at 24 points. But I think, guys, that if the markets as a whole are going to keep on going lower, which I think is going to be the case, the most immediate area of support for Facebook, and I didn't tell you this, so Facebook went down today 2.47%, and it closed today's trading session at $355. So the most immediate area of support for Facebook is going to be $350. $350 is a previous area of support that acted as such for Facebook back on August 19, and it also did it back on August 3rd. And we are also talking about a former area of support that acted as such for Facebook back on July 6th. But I think, guys, that in the case of Facebook, I am going to be more interested in picking up some shares at $343. $343 is a previous area of lower support that acted as such for the stock of this company back on July 8th. But we are also talking about a former area of overhead resistance in which the bulls of Facebook felt back on June 23rd. So at that price, I am going to be very tempted in order to pick up 40 or 50 shares of Facebook. If I happen to start a trade at $343, then my price target is going to be the former area of support that I just told you guys about, at $350, which would act to the upside as resistance, because if Facebook happens to break $350 to the downside, then on its way up, we are going to, or the bulls of Facebook are going to be dealing with a former area of support that obviously is going to act as a new resistance. So if I were able to take this trade the way that I am describing it, I could be making a 2.24% profit, more than enough in order to take a safe trade on Facebook. So yeah, in the case of Facebook, I am not going to buy the $350 dip. I think that if the markets keep on going lower, we might see the $343. And with Facebook, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys once again tomorrow, 3 or 4 hours after the market closes. Peace out.